What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Get ready to pump the brakes on this market behavior. I tell you what, there's some interesting charts that we're going to be going over today. We're going to get very technical in the S&P 500 and also the Qs. We're going to go over some stock market indicators and so forth. Got a lot to talk about, so we're just going to get right into it. We're going to start here at the zones. This is something that I share with my Patreon. Over here, they get access to my Discord where I post trade ideas, weekly expected moves. Not only these zones, but like a whole bunch more. I give my stock market indicators so much. It's only $9 a month if you want to join. If you don't, that's all good. I do a lot of free content here on YouTube. If you want to pay annually too, you also get a 16% discount. So it ends up being like $90 for the year. I will say I did post a lot of new trade ideas, but let me tell you one thing. You got to pay attention to this episode because although there's some really good setups out there, you got to pump the brakes because if the market starts taking a turn for the worst, everything and anything could get affected with volatility rising, okay? First, the zones. Okay, so the dollar was in the green. Guess what? It just, in a single day, right? We talked yesterday. I'm going to actually go to the dollar chart right now. We talked, not yesterday, the day before, we talked about this piercing pattern, right? Where you have a big red candle down, you have a gap down, and then you thrust through the 50% line of this prior candle, and that's typically bullish. And take a look. Hey, technical analysis, it still works. What do you know? Well, the dollar started breaking out through this wedge. So if the dollar is going to get some continuation here, that could put pressure on the S&P 500 and other assets. What other assets? We'll take a look here. As this went into the red, meaning it went higher, gold got hit. So gold futures, gold, GLD, SLV, right? Crude oil got smashed too. So take a look at some of these charts. Gold now finally broke out of this wedge, right? People were like chasing up into this area, kept on going up. We talked about this wedge a while ago, and there wasn't much action for, a week. And then bam, out of nowhere, we got 2 days of just severe hit to the downside. That right there, minus 2.81%. That's a very volatile move, people, on some big volume. Now, if you are, playing this as a cycle trade, I've heard many people taking this opportunity to start building in starter positions in gold because they believe there is going to be a leg up in the near future. And I kind of am in that boat. I just would prefer to take, I would like to get it at a little bit better of a price, maybe coming back into this prior resistance. So price pulls back. I will be honest. I had a lot of gold coins and I actually sold right up in here. And I was looking to buy actually more of like trading wise, like GLD, instead of owning the physical coin, at least for right now. Because I'm moving that into savings account. Besides the point, we'll continue on. Copper also kept on continuing to give us signs that, hey, we might, have to pump the brakes here. It broke down even further. It was down 0.84% on the day. This divergence may still play out. As you can see, we had the somewhat of a shooting star, gravestone type doji candle right here. So indecision. It doesn't mean that it's going to crash down, but it's not that great of a looking setup. Okay, oil also got smashed, right? So minus 3.28%. As I'm looking at it right now, it doesn't look healthy. It looks like it's possibly flagging right here. Boom, boom, where it can break down. But there's a lot of people, sorry, I don't know why I did that. A lot of people are very bullish oil, but as it stands right now, we just have a series of lower highs and lower lows as it stands. And then if you look at this pattern as a whole, this looks like a monster topping pattern where it could start, potentially break down to around 60. Maybe we go back up and so forth. Like, it's to proceed with caution. And as it stands right now, we're still kind of just right around that neckline of that product. Another thing that stood out to me on the last trading day was the TNX. It was up 4%. So we closed at this is basically the 10-year yield, right? So it's at 3.53%. We talked about this bullish divergence here. Now we have, somewhat of a morning star pattern. This is a 3-bar reversal pattern. So if we get follow through, it's just kind of going sideways. If we get follow through, that's going to put pressure on growth heavy names. And I can prove that to you by showing you this chart. The TNX is up here. Okay, and then what we have here are relative strength lines, meaning it's XLK, which is heavy growth stuff, relative to the SPY. So when this goes up, it means that technology, as you already know, is outperforming the SPY, and we've seen that here. Now XLY is also heavy growth names, like think of Tesla, Amazon, right? So these are some names that are in the XLY, and you can see it's been firing off this year too, basically since the start of 2023. But what I want to call out here is if the 10-year yield rises at a rapid rate, remember the rate of change really matters here, you got to look at what takes place on the relative strength lines between XLK to SPY. Oh, it struggles. So it's the SPY outperforms XLK. And then what happens to XLY? Oh, what do you know? It struggles. It starts heading down too. So I'm calling this out because take a look at this weekly candle on the 10-year yield. Match that with a different time frame here, how you have this morning star reversal, bullish divergences. If the 10-year yield wants to start rising here, breaking through this area and rising, it could put a pause on the XLK relative to the SPY, and it could also pump the brakes on consumer discretionary names. Okay, another chart that's interesting here is looking at the 10-year, 2-year spread up top and then the SPY down below. And you can see when we got into inversion, which was back here in July, you can see as this has been heading down, it's also the SPY hasn't been matching that movement, which is fine. But you can see when it started turning back up, that put pressure on the SPY. Same thing here. The 10-year yield and the 2-year yield curve, 10 minus 2 curve was inverting even deeper, and then the market rallied, right? And then as soon as it started turning back up, the market sunk back off. And I'm calling this out now because you can see here clearly the 10-year and 2-year curve is inverting deeper while the market's kind of just perpetuating this follow-through movement to the upside. Now, why is this important to know? Well, I told you there's a weekly hammer candle right here. So if this wants to start rising, what's going to potentially happen to the 10-year and 10 minus 2-year curve? Well, you can take a look here. The 2-year is in pink. So if the 10-year starts, moving and breaking up further and catching up to the 2-year, that right there is going to tell us that this curve, it's not going to go deeper inversion, but it could take a pause and potentially start turning back up or moving slightly up. And that right there we've seen puts pressure on the S&P 500. Okay, so there's a lot of different things going on, but just know that as looking at this, if we do start seeing the 10-year yield rise, that could very well put pressure on both XLK and XLY, which have been the strongest performers year to date. Now, let's take another look here at some breadth indicators. So I'm tripping over my words. Nasdaq McClellan Summation Index and the Nasdaq McClellan Oscillator. And I like to look at this for potential changes in trend. As you can see, it's still pointing up and the trend remains bullish as it is above zero. Now, there is a little bit of a red flag here that we still have a negative divergence building on the McClellan Oscillator. You can see we have a high and a higher high where we have a high and a lower high telling us, hey, this move was a nice big breadth move and that sparked this rally. But now, there is a divergence there, and divergences do play out. You can see that right here. And even on positive divergences right there where it started moving up to the upside, even right here, take a look. They're even in the summation index, right? And then you saw the positive move right here where you had a lower low. That was positive and we kicked off that rally right there. So that's also even right here. Take a look. I'm just, I used to have these marked out on the screen, so I kind of forget, but you had a lower low right there, lower closing low, and you could see breadth got stronger up in here versus down here, and then we sparked that big rally, okay? That's the Nasdaq Summation Index. Here's another one, the NYSE Summation Index, so another broad market here. You can see that we clearly have a high to a lower high, so that right there is breadth diverging from this move and this move. So you have a high to a higher high, a high to a lower high. However, we are well above that zero marker and the parabolic star is still trading under a summation index that's pointing up. So if we get some down movements up ahead, this can start turning over, the parabolic star catches up, and we could potentially hit a change in trend. And that could indicate that we can see some consolidation, a potential pullback, a move back down, or just this move just being consolidated upon that we've seen in 2023, which has been a strong move, right? This thing has just been pretty much, pretty solid trend up to the upside overall. Okay, so let's get into the S&P 500. Now, I shared this chart on Friday, and this was looking above the weekly expected move, and we measured out, okay, well, there's still a lot of volatility out here, people, right? $5.23 move, and that showed us this right here. So I just want to show you how did that finish, right? We talked about 68% of the time it closes within the weekly expected move, but also 68% of the time it closes within the other expected moves. So we said maybe it'll close right down in this area. All right, if you don't believe me, just go watch the video. Where did we close? We closed right here within the weekly expected move and within the expected move of that Friday. Now, what do I notice here so far? We are below that Fed anchored VWAP, so we got to see if price can reclaim that to be a little bit more bullish. I'll talk more about that momentarily when I get into the updated weekly expected moves. I want to take a look here at the monthly chart. You can see the quarterly expected move, the dashed line, the solid black line up above is the monthly expected move. We backed off slightly from those areas, and we are above a 5-period EMA that is inclining. So that is pretty bullish overall. As we're starting to break through this 4,100 level, you can see I keep on using the wrong one right there. So yeah, 4,100 right here. You can see there was a, it got hung up there, it got hung up there, it got hung up there, and we finally broke through. And you could see also, which is pretty positive, the PPO starting to curl itself back over. So as long as we can hold above an inclining 5-monthly EMA, that's a positive sign. As you can see, this red shaded area, that is measuring a bear market from here, 20% down, and we're out of that territory, which is a positive, like I said, a positive sign so far. Things can change, but I mean, it's at least decent to see overall from a technical perspective. Trust me, I could get into very negative macro stuff. I'm not going to get into that right now. Another thing that I want to point out is the weekly the weekly chart. It is now above the 50-period moving average on the weekly, and you can see here it's acted as resistance, and then it also broke down right through here, but it did tag that upper weekly Bollinger Band right there and got a little bit of resistance. The 5-weekly moving average is starting to cross back up through the declining 50-week moving average. So overall, that's a positive sign as it's breaking through this, but just be aware that we have we're at the upper realm of the Bollinger Band around that 4,200 level, which we've been discussing, right? If you don't remember, we've been talking about this chart. Hey, we see that this is a big level of, potential resistance here as it was prior support. And we came into that, we missed it by, 5 points. And then we started backing off from that level. So overall, yeah, inclining 200-week moving average, getting a little frothy there onto the upper weekly Bollinger Band. And we got above, which is positive, the 50-period weekly moving average, but it's still declining. Okay, so, patience is required. Now, we're going to go ahead and look at this specific chart here. This is S&P 500 on the daily. You're going to see a bunch of lines on the screen and a little, we've been talking about this channel, how it's been kind of going back and forth. Right here, we said over here, if you don't remember, I'm just going to reiterate it. The bulls need to reclaim the year-to-date anchored VWAP, and they did so. As soon as they did, guess what? We went for a monster rip. Now we're a little bit extended from that year-to-date anchored VWAP, but we are above it, and that is bullish, right? So doesn't mean we buy right here, but it might mean we buy somewhere else. And where can that potentially be? That's what I'm going to talk about. Take a look here at this prior peak. This was a nice big bear market rally. And then I'm anchoring an anchored VWAP to the bottom, actually, of the S&P 500, maybe a bottom. It might not be the bottom, but it was a bottom. This was actually CPI day. I remember it because I was in New York, and it came out, I can't remember the exact numbers, but it came out horrible looking out of the gate, and then we just saw a monster rip to the upside. And what you can see here is these anchored VWAPs are curling up and price is well above them. Okay, so what is this? So we already know that's the year to date over here. What about this little line? This is actually representing a 50% retracement and then the 61.8% retracement right here within this box. Why, from where? So I'm measuring it from up here, and if this is the top, if we start getting a pullback, this level in here would be a huge area of confluence. So imagine getting hit to the downside on some days like this where people become very bearish, but you're aware of the levels, right? So you know that the year-to-date anchored VWAP is right here. You know that there's a confluence of a lower channel right here. And then you also know that you have these two anchored VWAPs starting to curl up. So in this area could present, if we are really going to start moving into a bull market territory, or even if we're going to chop around this right in here, 390, to 395, that could be a very interesting level to start to play from. Now, we got to see what price does there, or if it even gets there, but I wanted to make you aware of those levels. Now, another thing I want to point out is a 15-minute chart on the new weekly expected moves. You can take a look or screenshot it. 404.68 to the downside in the SPY, 420 0.02 to the other side on the upper weekly expected move. And I'm just calling out here, you can see this trend line might be an important one to watch because we have had explosive moves from that lower trend line. So if this starts breaking, bam, bam, we might be able to break down further through that channel, maybe even get outside the lower weekly expected move, come back within it this next week. Now we're above an inclining 5-day moving average. It's bullish. You can see right here too, this could be potentially flagging. Okay, so yeah, price might come up, it might come down, it might scare some people. Maybe the 5-period moving average, maybe we get another U-turn and we go for another leg higher. Okay, as long as the 5-day moving average is inclining, you have to be at least a little bullish. But remember, if you want to be bearish, you can play, from extended levels and fade it, or just be patient and wait for price to confirm. Wait for the 5-day moving average to start curling over, price to do something like that, where you can very well see a high, a lower high, a low, and then lower lows, and then it comes back up, and then go, and so forth, as we can see clearly here, but more from a bullish perspective. All right, let's get into the Nasdaq 100. Nasdaq 100, this is from Friday. We talked about what? We talked about the expected move for Friday, and then remember, 68% of the time it lands within here, and then but also the weekly expected move is supposed to be 68% of the time. Now this isn't always accurate. I'm just showing you because how impressed I was. Look at where it closed. It closed on the weekly expected move, people, and it closed within the Friday expected move too. So it was slightly above, right? So 306, I think was the expected move, 306.18. We're talking 18 cents on a $300 product, $306 product. I think we can give that a win right there. It is below that Fed anchored VWAP there. I want to look at the monthly expected move and the quarterly expected move. You can see this red shaded area. We are in still bear market territory as measured by 20% down from the peak to here, right? So we're still down there. We are above a 5-period EMA, which is positive and moving above. You can see that we tagged the monthly expected move on what, day 2, day 3 of this month. So it's still early on, and we're above a quarterly expected move. So you remember, 68% of the time it comes back within here, and we've already tagged the upper. So hey, if it starts coming back down, watch out, right? It could get quite violent. And what can potentially bring it down? Well, we already discussed that at the beginning of this show. If you didn't listen, we'll go back and watch it. Now, if we take a look at the weekly expected move, sorry, I keep on chopping up my words. The weekly chart, you can see we're well above that weekly Bollinger Band. All right, so it's getting a little frothy there, but that's okay. Sometimes it can get overextended to the downside, right? Or the upside, and then it could come back eventually. So you can see we're moving up there. We are above that inclining 200 weekly moving average. We reclaimed the 50 weekly moving average, but it is still, people, declining. You might look at this and be like, hey, it's a double bottom. Hey, you might be right, actually, because that was 2 bottoms right there, and then we're starting to break through that. So that opens the door to potentially scream higher, right? Up to this prior swing high where our next test of resistance would be. We'll see if that's the case. I will say we do have overhead resistance. If you measure an anchored VWAP from the high in 2021, right, you can see that price gets above it sometimes, but breaks below. It gets above it, broke below. You can see right here, we ran up to it, right? These were the bear market rallies right here. This was a bear market rally. Boom. Everyone's like, we're back, baby. Everyone right here was like, we're back, baby. And then all of a sudden, we're back up here again. We're back, baby. Or are we? As it stands, we're above that year-to-date anchored VWAP, and we're quite a bit above it. So yeah, do you chase up here? I mean, me personally, no. This shooting star type candle could represent that we see some, consolidation, a pullback, and then we attack from that perspective. If we look at the 15-minute chart, this is that melt-up channel. Basically, since the start of the year, we've been putting in higher highs, higher lows. We have a 5-day moving average that is inclining. You can see the expected move for this next week can take us up to 315.07 or down to 297.29. Okay, you can see also here it's kind of could be potentially flagging as price. It could potentially move around in this area, maybe fakes us out and does something like that and breaks out further. That's always a possibility, people, so we got to be open for it. We are below the Fed anchored VWAP. If that starts curling over and acting as resistance, that could be a level to short, as if we get that lower high and then we start breaking down, something like that. But as it stands, we are above the inclining 5-day moving average. Remember, tops take some time, to form, right? So they take times, and then when risk happens, it can happen very quickly. Okay. Now, this episode has been all about pumping the brakes. So I hope I got that kind of across, where, the 10-year yield, if it starts moving up, what sectors can be affected, and that'd be something more like the heavy growth names, right? XLY, XLK. But I also want to point out the BP charts. BP charts, I like to look down here at the RSI, and I like to just, know when things are overbought, oversold conditions. And I just want to point out here the BP SPX, now it's 3 days in overbought conditions. As you can see, the RSI is, at 72.01. Remember, overbought can stay overbought for a while. We've seen that plenty of times, but it is still worth noting. Okay, BP NDX, the Nasdaq 100, it's at 72.34. That's an overbought condition. BPI-NFO, this is the technology sector. Look at this. See these red lines? Those were the large bear market rallies we recently talked about. So up into August and up into March, and those hit these levels right here. And now we're even above that. Okay, so this is basically telling us 88.16% of stocks in the technology sector are on buy signals based on the tic-tac-toe charts, right? The point and figure charts. But the RSI is getting pretty frothy. This is getting pretty frothy. So there's a lot of things lining up here that many bulls might not want to, they might see it, but they might not want to agree with it. But this is just what is taking place, people. I'm just reading the charts as they are. If we take a look at BP discretionary, and maybe I should be very clear here, this doesn't mean to short the market. That's not what this means. It's just giving you some insight as to things that can be potentially overextended, right? You got to make your trading decisions up for yourself. Me personally, I was looking to taking trading profits on my long positions, which I shared on Twitter, which I shared on the last video. And now I'm looking and sharing more trade ideas from the long side. But now, I got to approach it more cautiously, unfortunately. That's just what it is. Okay, this is discretionary, which we just talked about, right? XLY, we just talked about XLK. That's also very, very frothy up here, 85.71%. Are on buy signals, right? And RSI is getting extended. The NYSE is ripping up there, 83.76. And the BP comp, the Nasdaq composite, is ripping up there at 85.77. That's all I have for you, people. Make sure to pump the brakes, right? If you're feeling the FOMO, you got to be patient. You got to be calm. You got to wait for price to come to you. And if you don't, just at least have a plan in place. That's how you do it. So my plan, I'd love to start going long, that like even more so. But maybe I might look right here in this area to potentially really give it a really solid, strong shot to start loading up, okay? Or if it just consolidates a little bit, price doesn't get down there and does something like this, and then starts breaking back out through it, I'll take that shot. Maybe it just shoots up to this channel, right? And maybe I'll take some more profits out of the gate there. But this right here, these type of moves, they don't sustain. They do consolidate. They do digest. So just be aware of that. That just is what it is. That's all I got for you on today's episode, everybody. Hope you all had a wonderful weekend. I'll be back here on Monday.